Welcome to the Farm Family Harmony podcast. I'm your host, Elaine Fraze, Canada's Farm Whisperer. I've been helping farm families in agriculture find harmony for over 30 years, and now I'm bringing some simple, practical tools to you. Get help here creating transition plans and learn how to talk through the tough topics and conversations with your farm family. Now let's get into this episode topic. I'm so glad you're here. Hi there. Welcome to another episode of the Farm Family Harmony podcast. And today it's my joy and delight to introduce you to my longtime friend and now member of my coaching team from Lethbridge, Alberta, Glen Dodger. So Glen, tell us a little bit about your story and how you ended up being an accountant and how you're working as a farm family coach now.
Well, after I finished university, I joined an accounting firm and then got my professional designation. Subsequent to that, I also was interested in doing transition and financial planning, so I pursued a designation. I got my CFP, Certified Financial Planning designation, to kind of enhance the work that I was doing. I never ever did sell any product, but it was mostly for the information that I was able to use. And then a number of years, or a few years after that, I also joined CAFA, Canadian Association of Farm Advisors. And so I've been involved with farm families and transition work most of my career, probably for sure the last 30 years or so of it in particular.
I think you and I are pretty close in age, and we've been on this journey together in different provinces and across Canada for a long time. And today our theme is how to get better financial transparency for the founders and build a better relationship with your accountant. So I guess the first thing I'd like us to define, Glen, is what does financial transparency mean to you? Because that's one of the cornerstones of our discussion around finding fairness in farm transition, is that there needs to be financial transparency. So what does financial transparency actually mean?
I'm going to kind of use a definition that I found that I thought was actually very accurate. It's an accurate picture of your finances when making economic decisions. That includes your costs and your benefits. And one of the key elements of that is accountability. So you're using financial transparency to capture that information, to understand it, but also to provide a level of accountability for people.
I think what's disturbing to me, Glen, in the work that you and I have been doing for a long time is we meet so many young farmers in particular who are well educated, who come back to the ranch or come back to the farm, and the books haven't yet been opened to them. So why does that happen? Why is there not more accountability? And accountability is a huge part of what we do in coaching, in leading from behind and helping people take the next steps and discover what needs to happen. But why aren't the farm books getting opened?
I think it may stem from a couple of different things. One of them being that I think as a society, we keep a lot of our financial matters to ourselves. We don't really share a lot of that with outsiders, including other family members. I think that's part of it. The difference being that when you're dealing with a business, it's important to understand that it's not personal.
Right.
So you have a business entity, which farm books are, and then you have your personal finances. And the two might be commingled a little bit, but really, when you start looking at it, it's the farm books themselves that need to be available for people to look at. Because when you're making a decision about whether I want to join the farm or not, a lot of it relates to the fact that, okay, was there an economically viable entity here for me to join? Is it going to be plausible for me to actually take and choose this as a career path?
Well, and what disturbs me, and especially with young farmers, is I see so many of them not being compensated fairly, and they say, "Well, the farm can't afford to pay me more than $30,000 or $40,000 a year," and I think that's horrible.
Yeah, very true. And I guess when I take a look at that, I think about it from the perspective of a business again. And you and I have talked about this in the past. Is your farm a lifestyle or is it a business? And if it's a business, then it should be basically run as such. So you have to have a level of accountability. You have to have a level of bookkeeping and accounting that's going to allow for you to make proper business decisions in terms of your management and for the bankers, for your accountants, for tax purposes. So there's a variety of different things that do happen that relate to it as a business entity. And I think that that is a significant part of the conversations that have to happen for younger farmers who want to get into the business.
Well, I think that's one of your best clarifying questions, Glenn, as a coach, and I think that's a hot golden nugget for listeners to take away today. Is this farm or ranch, is this a lifestyle or is this a business? And you mentioned before the family, personal finances, and the finances of the business. And I have always used this three-circle model of the family circle, the management circle, and the ownership circle. And part of the work we do in coaching is to help people be really clear which circle are they in and where are they making decisions from. So tell me more about your experience, Glenn, with sort of, and I'll use myself as an example. I am in my late 60s and have never done the farm books and never will. And so I have this phrase that pays, where is it written? So Glenn, where is it written that the wife or the spouse on the farm should be doing the books? Who should be doing the books?
Somebody who's competent and who wants to do it. And I think that your example is an absolutely critical one because I think so often it defaults back to a family member because of the fact they have some time that's available that they aren't behind the wheel of the tractor or whatever else. And I think that in some cases it is just a default position, but they don't like to do it. They don't want to do it. It gets held off too long. They procrastinate in putting the records together. And so at the end of the year, all of a sudden it's a scramble. The problem with that is that at some point of time during that year-end process, your accountant actually knows more about your business than you do because
Right.
all of the financial information is available to the accountant, and you haven't had a chance to look at it yourself through the course of the year. And I feel that that's a real downfall. The the availability of various software,
Right.
whether it's QuickBooks or simply accounting or a variety of others.
Or Ag Expert, a lot of farmers using that.
Sure. And one of the things that I would do is I would talk to my accountant and find out which one he's most comfortable in dealing with and which one they support on a technical side. And if they say, well, it's this product, then incorporate it because most of it is not much more difficult than actually doing a set of manual records. You're writing checks, you're just using a computer in order to do it. So I would really encourage people to do that because what it does is it helps to get the information in on a timely basis. And if you use the software as it's designed, you categorize all of the expenses and the revenues, and you can get financial information on a monthly basis, very, very simply.
Well, and just like you said, procrastination, I said, as well as killing agriculture. And I'm thinking of a family right now where she's in her late 60s and not wanting to do the books and is assuming that her daughter is also going to take over. And I spoke directly to the doctor or to the daughter, and she said, no way, I do not. I do not want to do that, nor am I feeling that I'm skilled in that. So I guess as coaches, we want people to look at possibly outsourcing
Yep.
their bookkeeping. And again, Glenn, what you said right from the beginning of this conversation is people don't feel comfortable letting other people know about their finances. But we as coaches and you as an accountant deal from a code of ethics of confidentiality, and you're not spreading that around the small town. So there should be no fear of other people seeing your financial situation. So I also have younger and older farmers telling me they're not happy, Glenn, with the relationship with their accountant. So who does that fall on to change? What should happen?
Well, what I normally do is I recommend that people talk to a few different accountants. So, for example, uh, if I'm dealing with the founder and one of the children are coming up and they want to be involved, I try to incorporate them and have them part of the process. If they find that there is not a relationship that they can develop and they feel comfortable in dealing with me, what I would actually haven't had this happen, but what I have done for certain clients is say, hey, there's other people in our firm, for example, that also deal with this area, with the ag sector. And why don't you talk to a couple of them and see if you can find a better relationship,
A
if you
good
can
fit.
find, a better connection. Because not all of us, I have a certain approach to doing things. And for some people it works well, and for other people it may not. And so it's not a personal thing, I don't think. People said, yeah, I'd like to look at a different option for an accountant. I don't take that personally. I'd feel a little bit off that I wasn't able to provide that, but at the same time, then the goal is to try to find somebody who will fill that gap for you.
So you don't take it personally if someone doesn't find you a good fit. And I call this the bull in the middle of the room. And in our family, we did have a situation where our 30-something son, who is our successor, was not happy with how he was being treated by what you would call the back end of the accounting office. So we stayed within the same firm, but we moved to a different location and a different accountant. And that accountant, she actually comes out and overviews our bookkeeper, and she's available and she's proximate, and the relationship has been a lot better. So you're just giving people permission to make those shifts if they need to make them.
Oh, absolutely. I mean, accounting, if you think about it, we provide a service. And really, at the end of the day, there's a trust factor involved. There's, of course, the skill sets and the technical part of it. But really, the key element of any of this is the relationship that you develop with your client. There has to be a level of trust and accountability. And if you don't feel that you have that relationship, yeah, it's appropriate to consider other options.
So, Glenn, this whole thing about opening up the books, I think, is really critical to this conversation in terms of financial transparency. So I would like the listeners to know that you spent 14 hours with one of our young farmers in our coaching team who came to us for help because he needed to understand how much money he could cash flow and afford to buy his father, the founder, out. So do you want to describe your process for how you worked with him?
Sure. Basically, what happens is that if there isn't really, first of all, you need to have access to the books on record. So that's an
Basic.
basic part of what you're doing. But from there, what happens is that we build some cash flows. So I take the information, build a template, so you have your revenues, your direct costs, and your other expenses. And then at the very bottom, you have an area for your the actual cash flows. So your opening balance, opening bank balances, and then your capital asset acquisitions or disposals. And you start building it on a month-by-month basis. And over the course of the first year, what you're doing is you're using historical records to a large extent in order to develop that. And then what you're wanting to do is to take that and move it forward for 1 year, 3 years, and 5 years. And say, okay, you're now going to transition from being just an employee of the company to being in management. And so some of these decisions are going to fall on your shoulders. So as you're doing this, a cash flow statement, financial statements themselves are merely tools to use to get to that end. And you don't have to necessarily do all of the work related to them, although it's helpful if you can do some of it. But you need to understand how to read them and how to use them. That is the important part. So as a farmer, I don't necessarily expect the farmer to prepare financial statements, but I do expect that they would be able to read the financial statements and understand them. And that's part of my role, is the educational component of that, so that they can understand what a balance sheet is, what a cash flow statement is, what an income statement is, and how they impact on the farm and what they're used for.
Well, and I think the whole idea of cash flow is really critical too, especially for young farmers. And you and I have often talked about people's attitudes towards debt, and good debt and bad debt, and whether or not they can afford to buy things that will help make them money. But in the case that you worked on, what I was so grateful for was that your persistence and your patience. And I think, Glen, you have a very kind and gentle approach to how you work with farm clients. And this particular young man was just really, really relieved, I think, because we also talk in coaching about the neutral zone, which is the pain of not knowing. And if you don't know your numbers and you don't know what you can truly afford to buy out your parents or the founders, and what is affordable, and if the number is $2 million, then the number is $2 million. But it's not 4 million, and it's not 5. And it's not just a number that you've picked out of the sky. It's a number that you and the coaching client have worked on for quite a few hours to really determine what feels workable and what debt feels serviceable. And I really would encourage listeners to go back into our blog and look at the work that we've done around greed and entitlement too, because all of these things that we talk about on money is not a bad thing, but it's a resource that our listeners need to get better at managing. My other interesting question is, Glen, what's the one thing that you think would really improve people's financial transparency that they're not doing now?
It's at one point in time, you used to have to go to a college or someplace in order to kind of get some background. But now you can go online and just take some very simple, basic courses on introductory accounting, introductory bookkeeping. Nothing extensive, but just a familiarity with what is involved. What it is, it's a self-education process. What you're wanting to do is just educate yourself to the point where you say, okay, even though I may not necessarily do this, at least I can understand the process and what's involved. Okay. And I think that's the first step towards getting some of this. They do not teach financial literacy in the school system, which I have been appalled about for decades. Mm-hmm. And as a result, most people come out of high school, even college and university, without any financial understanding
of the basics.
And so for people that want to get involved in business, I think you have to take that step and get some kind of education in that area. It's absolutely pivotal to making good decisions in your business.
And one of my favorite authors on that subject is Bruce Sellery, who has a podcast called Moolala, and he has a book called moolala.ca, Why Smart People Do Dumb Things with Their Money. And it's just really important for people to grasp that. Well, is there anything that we've missed, Glen, today in terms of developing better financial transparency and a better relationship with your accountant. What about farm widows? Do you want to talk about them?
Farm
Widows, the women
widows.
who weren't brought to the table and don't have a relationship with the accountant when their spouse unexpectedly dies on the farm.
That is an extremely sad situation, because what happens is that it puts them in a position where they have all of the burden, the financial burden of trying to operate the farm. They may not understand, they may conceptually understand things, but okay, what's involved in the planting season? What crops are we going to grow? What rotation are we going to have? What products, in terms of fertilizers, are we going to apply, and where are we going to apply them? The other cropping side of it, but the other part of that relates to the finances.
Right.
And so, if they've been kept out of the loop, all of a sudden they have no idea what kind of dollars are involved. So you start to sell a few 100 tons of grain, or you start to sell a couple of dozen animals or whatever else, and all of a sudden checks start to come in in the hundreds of thousands of dollars, and it blows them away. They just are absolutely, in some cases, they're fearful about the fact that there's that much money being transacted, but not really understanding how it all pulls together. The fact that, yeah, there can be a lot of money coming in, but there's a lot of money going out for all of the expenses that relate to it.
And I think in my experience, what really bothers me, and I know that there are a lot of farm spouses who are women who have a really good handle on the finances. Those aren't the folks we're alluding to. But I do have a close friend who took the bull by the horns literally when her husband died. And she said, Elaine, I don't know these things. I need to get educated. And so she did two things. She started going to the accountant with her son, the farmer, to find out, get more literacy around that. And the second thing she did is that she also had more time with a financial planner to really put out a plan for her on what she needed to live well going forward and where her income streams are going to be coming from. And I just want listeners to understand that farm transition does not have to be tough. And the map that we use is, first of all, clarifying those income streams. How much is coming from the farm? How much is coming personally? And Glen, that's where you're a huge asset, because that's your superpower, is all that working financially of what's happening in the farm business. The next thing is housing. And then the third thing is fairness. And I think that's why we focused on financial transparency in this podcast today, because it's my desire and your desire that every farm family manages money well and can talk about money really fluently, and that everybody's included in that conversation. So Glen, I want to thank you for your time today. We've used up 23 and a half minutes, and in Italian it's a pomodoro, which is a unit of time where you can really get something done. So as a call to action, I'm going to encourage listeners to check in with their accountant, see that their books are up to order. Also check out Bruce Sellery's podcast, Moolala, or get his book. And Glen, you are doing great work in Alberta for us on our coaching team, and anybody that's listening from across Canada can also work with you over Zoom. And we're here and happy to give discovery calls. So just as we end, I just have a little script here that I want to read, because we're starting something new, and it's coming down the pipeline just after harvest for families who are struggling to get anywhere with their farm transition. And it's a membership format that I've created that touches on every single aspect of farm transition and that I've encountered over the last 30 years, as Glen has, of helping real farm families. So I have it in mind for those of you who are feeling overwhelmed because you want to decrease your stress and anxiety. And it's something that you and your family can easily work on and get a sense of accomplishment, just like that sense of accomplishment that Glen gave that young farmer who figured out that he could only pay his founding father $2 million and not a whole lot more. So this is an important work that we're doing to get things done and take the weight off your shoulders as farm families. And don't wait for something bad to happen until you get these things done. So the wait list is coming out shortly, so don't miss out on that. And if you want to learn more about it, just go to Farm Family Coach. You can find me. You can check out Glen's bio at Farm Family Coach. And we wish you all a happy season, whichever season of farming you're in now. And thanks, Glen, for joining us today. See you next time.
You're welcome.
Okay. Remember, it's your farm, it's your family, it's your choice. Go out there and find harmony through understanding. Talk to you next time.